everyone, welcome to Closing Trades right here on ET Now. Let's just take stock of what the closing trades are up to before we head into the long weekend and say goodbye to this truncated week. We started off quite okay. We were above the 17,800 mark, picked up a little bit from there, gave up most of our gains, traded in the red a little bit, and again you are seeing a bit of a recovery come by. So let's see in the last 1 hour now, can we finally pick it up above that 17,800 mark once again, which we sure did attempt earlier in today's trading session. For the futures though, even though it's a flat move, we're well above that 17,008K mark. Of course, it's names like Eicher Motors, HDFC Life, Apollo Hospitals, Britannia, Bajaj Finance. They're all the ones which are seeing a fair amount of traction, as is an AU Small Finance Bank as well. Just look at the kind of tear that you're seeing on that stock. The intraday graph will just come up for you on your screens. On last check, the stock is holding up almost 17%. Remember, the RBI has approved the reappointment of Sanjay Agarwal as the MD and CEO of AUSFB. And that's clearly been aiding the stock price. That said, bunch of other stocks as well which are in focus this afternoon. You've got TCS, of course, after the weak Q4 that it delivered, hampered the move on the rest of the IT pack as well to start off with. And you haven't seen any improvement come by for TCS since that opening downtick. We're still down about 1.5% for this particular stock. Eicher Motors, I just highlighted that's the top gainer on the Nifty. Goldman Sachs has initiated coverage of the stock with a buy and a target price of 36.60. In fact, they are expecting a 22% EPS CAGR over FY23 to 26 estimated. Saying that market is underpinning right now the upside opportunity that this particular stock could throw up in the next 12 months to come. So these are a bunch of stocks which are fairly active in today's trading session. Before we talk individual stocks, let's also get in some trading ideas and the market perspective as well. Kunal, hi afternoon. Played along expected lines. It's gone into a bit of a quiet consolidation kind of move.
Yeah, two different pictures, Aisha, I would say for the indices. On the Nifty, yes, it's absolutely quiet. We are trading very, very sideways on the index, just flattish. I think 30 points, 40 points, plus minus, I think has been the range for the Nifty so far on an intraday basis. But for the bank Nifty, it's a lot more vibrant. We've seen private sector banks making a very strong comeback, whether it's the likes of ICICI Bank, Axis Bank today is showing some slight green tinge to itself. Even the likes of Kotak Bank as well as HDFC Bank are seeing some decent price action for themselves. So that's a sector which has done exceptionally well for itself. And again, I think straight 3 or 4 consecutive days of price recovery for the banking index makes it more than 1,000 to 1,200 points gain on the bank Nifty, even in the last 2 or 3 days. So I believe that the action is shifting more towards the individual sectors. Like for example, a few days back, we had the real estate pack, which was doing exceptionally well. Then the smaller sectors like fertilizer, sugar, these stocks also participated quite well for themselves. So it's a sector rotation which is happening, on a step-by-step basis at every new high the index makes on a short-term chart. So I think that's a good sign for the market overall. 17,500 remains to be a crucial support until the time we trade above those levels. Any dip should be taken as a buying opportunity.
Okay, any dip should be used as a buying opportunity. That's the word coming in from Kunal. But Naresh, your take on the market at this point of time, index, bank Nifty, what kind of trade are you anticipating?
So we are getting into a little bit of a stretch mode, but say on the bank Nifty at 42,000, 42,200 would be a little bit of a stretch. So a pause could be warranted at these prices going forward. But momentum can continue. That is the reason. So it's not the time to chase the markets, but be stock specific. So in the banking names, for example, IndusInd and Axis Bank are yet to catch up. The move which happened in HDFC and ICICI. So one can look for such trades. Same is the case. Nifty is about to cross that 17,800 mark. And if we sustain above that, the next level is 18,100 odd levels. So overall, the momentum is strong. It's just that the risk reward of trading fresh on the indices is a little out of place because you have an upside of 200, 300 points and the stop losses come at 200, 300. But overall, the trend is positive. I would expect stock specific action to be better. So time to play stock specific rather than the index.
Okay, better to play stock specific. That's the word coming in. And in stock specific action, wanted your take, Naresh, regarding a few of these IT names as well, and especially from the mid-cap space. So Sonata Software, LTI Mindtree, Persistent Systems, they're all declining. Would you be a buyer in any of these names on correction?
So I would be waiting out for some time, at least the first few quarterly results to get out of the system. Because we are getting into a point where trends are very, very different in all the IT names. So, for example, KPIT saw a decline last week and it has almost recovered 60% of that move. So, volatility has increased even in stocks which was trending well. And now, on the other end, we are seeing Infosys closer to the previous lows, Wipro closer to the previous lows. So, in this scenario, one needs to wait out, let the couple of results go, and then maybe look at the mid caps. So, the stocks on radar are LTI, Mindtree, which could say outperform going forward if it sustains above 4850 levels. Tech Mahindra. So these are the names I'm watching out, but would wait for the first at least 4 or 5 top results to get done.
Right. In the meantime, you are seeing the trade data come by and FY23 imports, they have seen an uptick. $714 billion is where they stand at. And if you can just bring up that trade deficit flash as well at 266.78 billion versus a comparable of 191. I don't know what's the estimate that the street is working with, but definitely this is quite a bit of jump that they have seen. While there's been a dip in the non-oil imports that we've seen for the month of March. Let's see what's happened to the March non-oil imports. They've seen a pretty much a flattish move on a year-on-year basis, but when it comes to the March data, they've seen a bit of a dip coming in over there. The exports, they stand at $38.38 billion, so that again is a dip on a year-on-year basis. That's the same quarter from last year. Okay, that said, the overall movement in the market, let's just address a couple of losers as well, because clearly the entire IT pack is the one which is a bit of a drag. Look at Infosys ahead of its numbers. That stock itself is down about 3%. You've not seen any recovery come by for TCS at all. It's still languishing, down about 1.5% or so. And Persistent, LTIM, the weakness in these large caps are rubbing off onto the mid-cap IT arena as well. Anisha, you track the IT sector closely. What's expected from Infi, especially after what we've heard from TCS?
Well, the expectation for TCS, for instance, was 1% constant currency growth. The actual has come in at 0.6. For Infosys, the expectation itself is around 0.6, 0.7. So the range is quite wide. There is a part of the street which is actually expecting a decline, also 1.1% in constant currency term, and the expectation on the upside goes to as high as 1.1%. So the realistic number after looking at TCS's performance should be around 0.5, 0.4% in terms of constant currency. Having said that, the margin is expected to remain flat. For TCS, we were expecting a 50 basis point growth, but that did not pan out. For Infosys, we're expecting flat. Let's see what they actually deliver, because if there's softness on the top line, it will percolate into the margins as well. Separately, as far as the deal win pipeline is concerned, it was pretty healthy. We had seen similar trend come in for TCS as well, and for Infosys, the announcements do point to the fact that there could be a $2 to $2.5 billion worth of deal signings in the quarter gone by, and the profitability should also hold up steady. The key number really to watch out for from Infosys will be their FY24 guidance, because this is the first company which will come out with an established number in terms of FY24 growth, and that will become the benchmark. A large part of the street is working with a 6 to 8% growth. Anything lower than that will be a bit of a disappointment. And on margin, the expectation is it's going to be 21 to 22% band. If there is an upside on the higher level, that will be interesting to track. But for now, the street is going a tad bit muted into the expectations, and the stock too down about 3%. Valuation wise, it's always traded at a discount to TCS. It's right now 22 times versus 24 times of TCS. But again, close to the 5-year averages that we have seen. But Nikunj, you also had a conversation with the TCS management this morning. What's your reading of what their commentary is like when it comes to demand, and what are the challenges you see ahead for the IT sector?
Do you see
No,
challenges?
I'll tell you why. Because I've been going to TCS for over 20 years now, and sometimes you know that there is a clear view, and sometimes you know that there is a divided view. For me, the takeaway, and it's not based on body language or aggression, it's purely based on words. The CFO tells me that double-digit growth will be an aspirational number. The CEO designate tells me that the down cycle in 2023 is a very short-lived cycle, which is not going to be a long one, which means that we're in for a small pain. And the COO tells me that there is a possibility of a double-digit growth. Now, it's a very contradictory kind of commentary which I've got, and I'm saying it based purely on the conversation today. That is where I feel that right now there is more uncertainty rather than clarity. And I'm talking about next 2 or 3 quarters. Look, 3 years out, 5 years out, Indian IT outsourcing will continue. that big picture argument of cost arbitrage, technology arbitrage, that is like a, that's like a, this is a business which is built to last. What we are discussing here is how do you value the terminal rate for the stock for next 2 or 3 quarters, and that's where I think you've not come with clarity. You've come with some degree of lack of visibility, or perhaps, if I may use the word, that I think that for the IT sector per se, based on what we've heard from TCS, and this is an efficient management, I think there is fog on the windscreen. Sandeep Sabharwal, good afternoon. There is fog on the windscreen. I'm using a line Narayan Murthy used a couple of years ago.
Yeah, I think what you're saying is right, because there is a significant uncertainty around IT outsourcing demand, and I think it's very tough to decipher what TCS Bangalore says, because they tend to be always bullish. Now that doesn't make any sense at a time, and a lot of people rely on what the management says to make their views in the sector. I think that itself is a very fallacious way of looking at it, because last quarter they were so bullish on US growth, and that growth didn't come through. Now they are bearish. So we need to form our own views. When we look at the macros, what is there in the US, there are clear signs of a strong economy, delayed decision making will be there, discretionary spending will be cut, and that will happen possibly in Europe, etc. also, although they've already gone on Europe demand. But I don't see any case for that actually to be there. So this year, the way things are right now, I would think that many of the IT companies will have 0 to 5% earning growth. So in that context, people need to decide what valuation they want to give these companies. At some stage, as the growth outlook prowls and we see better valuations, we'll obviously look to buy this sector, but not now.
So Sandeep, now what we're discussing, I guess some would say, is already known, right? This is not a known unknown devil, that there is lack of visibility, there is lack of clarity. Stocks are down. Wipro is down 40%, TCS is down 15-20%, Infosys is also down by 15-20%. How much of this uncertain, nervous, short-term volatile scenario is already in the price?
But these prices are down without any selling from institutional investors. Most investors tend to be very overweight on technology stocks, and whereas there are better opportunities on the domestic cyclicals. So I think that's where we will see underperformance continue, because there are drivers domestically which will drive many other sectors which are not there for this sector now. So just because it's a huge index weighted, you want to just stick around with that, or do you want to move into something else, is something what investors need to decide. The managements of these companies are recognizing the slowdown and decline for the first time. So till last quarter, they were a bit cautious, but still too down. So I think that's where the risk lies. The earning growth expectations are still very high. For TCS, what I saw was that after the results, most analysts have cut the earning growth by around 1 to 2% for this year. The cuts will be much deeper, much more deeper, and that's what people will realize as the current quarter, next quarter results come out. So that will be the time I think we'll see opportunities to buy, not right.
Look at DLF. Look at DLF. That one is just going gangbusters. Max Ventures. Now it's the name is Max Ventures, but it is in the real estate business. That is DLF for you, 4,170 rupees for Max Ventures, Delhi-based real estate company. What else is there in Delhi actually? DLF and Max Ventures. Am I missing any other name?
Anantraj? Is that Delhi?
Yeah, Anantraj is Delhi-based. Thank you. Anantraj is the other one which I can assume without even looking at the chart. In last 8-10 days must have done well.
And DLF. I mean, NCR based.
Yeah, you know, it's actually very interesting. If you think about the NCR region, which is a large region, you don't have too many real estate builders now. Unitech has run into rough weather. Supertech has run into rough weather. Utpal Builders has run into rough weather. Ansal has been into, a big question mark there as to what's happening there. It's in Mumbai, however, you still have 2, 3, 4 names which in a sense have survived the entire downturn in the real estate cycle. You've got You got Oberoi, you got Lodha, Godrej. So you got big players. Coltes
And
come
many
back.
unlisted guys.
Unlisted
as
players.
well,
Kalpataru, Keystone, which has just gone
Yeah,
public.
Rustom
So
J.
you got big players actually in Bombay. In the NCR region, you don't have that many players. Prestige has come to Bombay. In South, you got Shobha, you got Prestige, you got Brigade. But it's only in NCR region where the entire RERA and the downtick in the cycle has forced a lot of builders or consolidation in the market actually has been very strong. You remember Lajpat Nagar, Triple C, that entire complex, the builders gone bankrupt.
3 C's, not
Three
triple
C's.
C's. Yeah.
3 C's, yeah, Triple C, 3 C's.
3 C's, yeah. Okay, that's that in realty. But Kunal, you continue to be pretty gung-ho on prospects of realty stocks, right? And the list stretches beyond DLF.
Yeah, DLF, Anatraj, these are the two stocks which I've been recommending regularly. I think even Godrej Properties has made a very good comeback for itself. I think the last 1 week, 10 odd days, it's risen up more than 15 to 20% from its major lows. And remember, I think Godrej Properties was one of the first stocks which was beaten down significantly from the 2021 highs. I think the stock had corrected more than 60% to 70%. So, a start of a recovery could be a very good sign that probably the downward trend of the last 1.5 odd year could be over for the stock. And the move is trickling into the other non-F&O stocks like Brigade, Sobha Developers. Many of these stocks are also seeing some very good recovery for themselves. So the list just increases significantly for the real estate pack, but I would stick to DLF and Anantraj as of now.
Okay, so sticking with Anantraj and DLF as the top bets in the realty sector, the ones having presence in NCR Delhi region. But let's take a look at what else is buzzing in the market. In terms of the gainers, of course, AU Small Finance Bank and FACT. These are the two counters which have had a solid run. In fact, FACT is up as much as 48% in the last 4 sessions itself. Naresh, your take if you look at the counters, fertilizer names, FACT and even AU Small Finance Bank.
So fact is something which I don't look at given the fact that it has very low float. Majority of the shareholding is with the President of India and the rest is with very few shareholders. So the stock has been, say it went up from 140 to 380 and then came back to 200 really fast and now it is back to 340 levels. So I would avoid the fertilizer pack as of now because the leadership names which were Coromandel, Chambal, etc. have not taken any leadership. We are just seeing this wild moves in some of the PSU names which are very low float. So not looking at the fertilizer pack would be something which would be an avoid. The only one which continues to remain on radar is Deepak Fertilizers, which is a longer term better chart, which is correction is done.
Sandeep, how much of the uptick in some of the real estate stocks is going to last? One side we are talking about demand getting crushed because of high inflation, and on the other side these stocks which in a sense are a complete play on discretionary spend are going higher.
So real estate obviously is a sector where the correlation with interest rates as well as stock price movement is very high. So I think till the interest rates were going, from the start of the interest rate upcycle till what I believe is the end of the upcycle which has happened, we saw the real estate sector underperform after the big up move of 2021. Now I think a fresh move is starting in many of the stocks led by DLF, which I believe could last for some time. So I would think that there is near-term upside in real estate stocks at this stage.
Let's take the closing trades as well from our technical experts. Kunal, you go first. What's the closing trade that you are identifying?
So it's on Canara Bank. I think most of the PSU banking stocks are making a comeback for themselves. Canara Bank has not yet confirmed a breakout. I think I would anticipate a breakout given the kind of momentum the PSU bank sector is going through. So would suggest a buy, and my expectation is that possibly the 300 to 310 mark could be achieved this time around for Canara Bank.
Naresh, what about you? Canara Bank is something that Kunal is recommending, but what about you, Naresh?
So we'll be looking at another favorite of Kunal, that is IndusInd Bank. The stock saw a cut of 4-5% in the opening trade today and has made a full recovery and is up almost 2% now. So such a candle generally leads to a follow-up move as well. So expecting this stock to go towards 1150 to 1180 mark. So that's a trade I'm looking out for over the next couple of sessions.
Coming in IndusInd Bank, it saw a decline of around 4% at open, but has recovered quite a bit from the lowest point of the trading session. On that note, slipping into a very short break. Welcome back. Well, let's take a look at what's happening in the market. With respect to the sectors, it continues to be realty, which is actually powering ahead, and Godrej Properties is one stock which has made quite a decent return this week itself, 14% gain. DLF, as we were talking about, has also seen a gain of around 9% and continues the up move today as well. Bank Nifty too has managed to, outperform this week in the sense that there's a gain of 2.5% there. And then autos too have had a solid run with Eicher Motors up around 8.5%. But a lot of rejig is happening at the top when it comes to the CEO levels, and we have seen big moves come into the stock prices as well. AU Small Finance Bank is on a tear today after RBI approved the CEO's term extension for the same number of years as the board had requested. It has done that about 9 times of the 16 in the past 6 years. Mamakshi is joining us to tell us the details with respect to the key CEO changes that we have seen of late.
Well, absolutely. Today, Sanjay Agarwal, the MD and CEO of AU Small Finance Bank, has received the extension approved by RBI for the next 3 years. In fact, this approval is definitely in line with what the bank was seeking. The stock has rallied in the trading session today after this news flow came in. However, in the past, when you look at it, the board had approved an extension of 5 years, while RBI has extended it only for 3 years. Now, let's look at some other instances as well. Now, in the last 6 years, in 9 out of 16 instances, the tenure of most banks has been extended for a shorter duration than sought. Now, very recently, RBI approved the extension of IndusInd Bank's MD and CEO, who is Mr. Suman Katpalia, by 2 years as compared to the 3-year extension that was sought by the bank. Federal Bank has also sought reappointment of Mr. Shyam Srinivasan thrice in the last 3 years, and it is only recently that the RBI's extension decision was in line with what the bank was looking for. ICICI Bank too had sought the extension of its head honco in October 2018 for 5 years, out of which it received RBI nod for only 3 years. But in October 2021, RBI gave its assent to the tenure of 2 years that the bank had sought. So that was the past, but what about going ahead? Now in 2023, 6 banks may seek to reappoint their MD and CEO. First up is City Union Bank in April itself. Equitas and Karur Vysya Bank are also expected to seek approval in July, while HDFC Bank and ICICI Bank will be doing the same in October 2023. Lastly, Mr. Uday Kotak's term is ending in December 2023. So largely those were all the stocks.
Let's, continue with that subject. And Jefferies has come out with this latest note. They've been studying the CEO changes in large companies over the last 5 years, specifically banks, and how the stocks have performed after the transitions. Ashesha is here with the takeaways.
Well, yes, management rejig and CEO changes is the talk of the town, isn't it? And on the back of that, Jefferies has done some interesting analysis. So we thought, why not take our viewers to this particular analysis? First up, they talk about the total size, the total quantum of companies that are expected to witness management rejig or CEO changes in the coming 12 months. They say companies with a market cap of nearly $465 billion US, or companies with Nifty weightage of nearly 21%, and companies with FII holdings of nearly 17% are expected to witness CEO change in the upcoming 12 months. Next up, let's also talk about a few companies, few large cap companies which are expected to see this change. Large cap IT company TCS. We have some other banks which are expected to see this change. So SBI, HDFC, we have Kotak Bank, ICICI Prudential are some of the other companies which are expected to see this change. So now let's understand what Jefferies has to say. So they analyze nearly 72 CEO transitions over the last 5-year period among large listed companies, and they say that in 53% of such cases, stock trends do not change around CEO transition, which means that if the stock is underperforming before the transition, they continue to underperform, and if they were outperforming, they continue to outperform. They also say that external hiring seems to have made a positive difference in stock price trends in many cases. As I mentioned, in 53% of the cases, trends were not changing, but they say that in the balance 47% of the cases, stock reversed relative outperformance, and they say 68% of these changes were good, which means that if the stock was underperforming before the change, they started outperforming after the change. Let's also analyze and understand some of the other trends that Jefferies report has highlighted. They say that 55% of small cap companies choose to hire externally. Now, this is is in stark contrast to what large cap companies have been doing. The report also says that less than 40% large cap companies replace CEOs with external hirings, which means that most of large companies continue and choose the internal candidates that they have. So that's the interesting analysis that Jefferies has come out with in the light of several CEO changes that are expected to happen in the upcoming 12 months.
Thank you so much for joining us. Yes, definitely. It's the talk of the town, all the CEO changes that we have seen of late. It's the weekly options expiry day, and that's the impact perhaps we are starting to see in the index as well. So 17,820 at the highest point of the trading session is where we are at. Kunal, in the last couple of weeks wherein we have seen the solid run come in from Nifty, Reliance has been a bit quiet. What's your take as to where it's headed?
So again, a phase for the market for the stock where it doesn't participate on the upside, but then I think it played the leading role towards the recovery, because from 2200 to 2300, where the stock moved up in just a matter of, I think, a couple of trading sessions, it boosted the sentiment for the markets as well as for the stock itself. Now the base has shifted up higher for Reliance Industries. So the only good part is that the 2200 mark, which it tested and which it bounced off from, that's established as a strong support for Reliance Industries. So we may expect the very slow and a gradual recovery, but I think 2450, 2500 is where the near-term targets could be seen for Reliance Industries.
Okay, that's the take coming in on Reliance. Let's take a very quick break on that note, but let's also hear it out from the TCS top brass. Nikunj interacted with them earlier today. Here's a slice of that interaction.
We expected at the beginning of the year, when going into February and March, given the financial volatility which happened and the banking crisis happened, has led to clients being risk averse, cautious, more cautious than usual. And that is what has played out. And the immediate reaction was to put a stop on significant amount of discretionary projects which were there, projects which can be delayed. They want further certainty before they start projects which are not critical.
Fair point. So, we've had an extraordinary high attrition rate for the sector per se. Historical hikes or the hikes at least in the last 2 years were above the historical average. Do you see a big change happening there? Will things revert back to the mean? And if that happens, then we are looking at a huge change in terms of the operating cost, margins and other factors.
Hikes this year will be similar to what we have been giving. Okay. Especially for high performers, we are definitely are looking to get them to 12 to 15% hikes. And then, for 8, 5, 1.5 is kind of that kind of number which is coming in. So that is good. That has always been like this. Actually, better than what we have done in the previous years. So that does not change in spite of all the things which you talk about, margin and cost. That we do it irrespective, and then we again traverse the year right together. I think, and obviously variable pay, quarterly variable pay, all of that is 100% in the last quarter. So we have to keep those things intact, irrespective of what we do, how we manage other things, and that is how TCS has been all along, and it continues to be like that. With respect to overall industry, yes, we have seen many things. We are seeing other companies, smaller companies, letting people go. I'm saying opportunities is open for everybody to take an opportunity in TCS, and people are welcome to apply, and we will obviously glad to have them.
Again, the green 10 points higher for the Nifty, 27 points higher for the Sensex. So Kunal, this would be the third weekly positive close? Or
yeah,
second?
Third.
Last week was 2 holidays, so it's not considering a full week, but it's been almost a 1,000-point trend.
Yeah, third week for both the indices.
Third week of positive close for the Bank Nifty and for the Nifty. And this was quite amazing. Frankly, nobody saw this coming 3 weeks ago, because 3 weeks ago the positioning of the market was centered around problem in US regional banks, acute selling by FI, a cut by OPEC, and a spike in oil prices. What has changed? FIs are back. Inflation has cooled off. To a large extent, you would also say that the narrative by global brokerages, which was around India being an expensive destination, that also has changed. But it's a classic V. The fact that you are all set to close at the highest point of the day, I think it's quite impressive. So Kunal, we were discussing the importance of 17,800. We opened above that, we came down, we are set to close above that, which means that more and more, I mean, the breakout is now getting endorsed.
Yes. So when a important level is being met, the index either takes a bit of a pause or it tries to just fiddle through that resistance, trying to lessen the importance of that resistance. And for that to happen, intraday you might see change of positions. For example, today morning, when the indices opened, there was a very good amount of writing at the 17,800 call, as well as for 41,700 to 800 strikes for the Bank Nifty. Now, both these resistances, at least till mid part of the session today, were acting as resistances for the indices respectively, Nifty and Bank Nifty. But then once the market got into that last 1 hour phase is where we saw both these levels being taken out, 17,800. The option writers changed their stance from being writing of call options to now starting to unwind their positions, and same was the case in Bank Nifty. And when that happens, it changes the texture for the market as well as the levels significantly. So now we could be looking at a possibility of a gap up on Monday, and that 17,800 mark today, which is where we would probably be closing on a mild uptick, that may actually act as a support. So in fact, it's a good strategy to now look out for building long positions even as a BTST trade for the indices, both the Nifty and Bank Nifty.
Okay, that's the take coming in on what the indexes are up to. Mayuresh Joshi as well joins in on the show right now. Mayuresh, hi, afternoon. TCS has pretty much set the trend. We're expecting weaker performance from Infosys, and clearly the disappointment from TCS is rubbing off on what the IT stocks are doing. Wanted to understand from you, where within the Q4 earnings season are you expecting outliers from? Where is it that you're expecting a positive surprise by way of earnings performance?
So afternoon, Eicher. No, absolutely, I think. And the large consensus is built on expectations that revenue growth is going to get muted. With the fresh banking crisis which has emerged in the US and the commentary which has come so far from TCS, it seems that BFSI will be a weak link for most stocks within the IT space. Therefore, I think large expectations in terms of an outperformance as far as an earnings outbeat is concerned seem very muted at this point of time. Margins should be relatively better for most of these companies because attrition issues are largely behind them. What you're probably also seeing in terms of more consolidation happening when it comes to either outsourcing or otherwise, it should also prop up margins to a large extent. Having said that, the kind of price damage that has probably happened for most IT stocks, large caps, mid caps, a few outliers, Aisha, if you ask me, within the mid cap space have been stocks like KPIT or Sonata. But the story there has been unique in terms of revenue growth far higher than its peers, more order wins coming their way, which gives even more revenue visibility going forward. And as things start cooling off, EBIT margins should remain extremely stable for these companies as well. Therefore, I think large cap IT companies or the sector as a whole would probably get into a time-wise correction. A large part of the price damage is already done. The mid-cap universe, probably if they disappoint in terms of earnings expectations, might correct more because the valuations in comparison with large caps are still relatively higher. The overall for the pack as a whole, I think the valuations have come on. But whether it's the right time to probably get in the stocks at this point of time, our take is that time correction might take a quarter or two, which means better entry points in a few weeks, months.
HCL Tech, you got Wipro, you got Infosys. There are three numbers which still are not due. Naresh, is there a decisive move now in some of the private banks? HDFC Bank almost at a new high. IndusInd Bank, smart recovery of 10% plus. Banks have led the rally. But do you think now private banks will only move higher?
So out here, I'm a little confused in terms of HDFC Bank, whether it has the strength to cross that 1700 mark in this move, because it's made a move from 1550 to 1700 in a straight line. So can it cross about 1700? That's a tough call. We've hit a new 52-week high on HDFC Limited. So even if it breaks out, I doubt it will make a sharp move, because ideally breaking above 1700 should give a 10% move, which I doubt. So a couple of days of a pause could be possible before we could do that on some of the banking names. But there are two banks which have yet to catch up. So that is Axis Bank and IndusInd Bank. We've seen a move in ICICI Bank where it has gone up to 900. So in the private banking space, I would expect Axis and IndusInd to have another 3-4% to 5% of upside. So that's a trade which is open, but would wait for some time for HDFC Bank. And that is where the problem is for the Bank Nifty as well, where the largest weight is HDFC Bank. And I think there is a little bit of a time left before it can break out about that 1700, 730, 1720 mark.
But HDFC Bank, let's also go across to my colleague with the preview as to what the expectations are. The Q4, of course, the operational details were out already and they managed to surprise again when it comes to their deposit growth. But what about the profitability? Let's go across to my colleague to understand it better.
Well, yes, HDFC will kickstart the banking earnings for Q4. We're expecting net interest income to expand a solid 25% on year-on-year basis. 23,500 crore is where that number is expected to come at. A healthy clip with regard to the way in which loans have also grown, 17%. They've disclosed that particular number in their business update. Moving quickly on to operating profit, though operating profit not growing as fast as probably the net interest income, and that's on the back of good OPEX that HDFC continues to push out. Because of the number of branches that they are opening, 1400 plus branches in this particular year is what they've already pushed out, and therefore your operating profit will come in 19,500 crores odd, and it'll expand by around 19.5% on a year-on-year basis. We're also expecting provisions to see a bit of an uptick when I'm looking at it sequentially. 3,000 crore is where that will come at versus the 2,800 crore Q3 of FY23. And therefore, we'll see profit after tax also largely in line. 19% higher is where we'll see profit after tax. Around that 12,000 crore mark is where we anticipate to see that. Now, in terms of disclosures, they've already told us deposit growth has been extremely strong, 21%, 1.5 lakh crore of deposits completely mobilized in this particular quarter. What a stellar quarter it's been in terms of that particular metric for HDFC Bank. The other piece, of course, to look out for is one is credit cards. The second is margins. Mind you, where do margins move from here as the deposits start getting mobilized is a key question. And the other piece that also one would have to look out for is how quickly is the merger now going to go through, because that 23 lakh crore book is what we will get to see, I don't know, maybe in Q1 of the next year.
Okay. Mayuresh, IDBI Bank today is, the stock is on a roll. A news agency has reported that there are 3 bidders who are interested in acquiring government stake in IDBI Bank. The government has already cleared the decks. There is a lot of changes which have happened both at the regulatory front and even at the government front. Do you think decks are now cleared for IDBI Bank and this really could be a classic news-driven stock for rest of the year?
I think as far as the news is concerned, probably it will move as the news comes through. But as far as the asset quality portion is concerned, it is going to take time. I think who's going to take over what part of debt, how much of that is already provisioned onto its books, and how much further provisioning is required for the rest of the assets that remain on its balance sheet. I think they still remain big question marks because asset quality pressures have continued for the bank over the periodicity of time when other banks have reported a better set of numbers on these key parameters. So yeah, I think sentimental moves absolutely possible. But a couple of banks that we would like to keep on our focus on the only lens. On the private side, Federal Bank, good update given as far as Q4 is concerned. Expectation in terms of reasonable advances growth expected to continue for the better part of this financial year. Deposit mobilization has been reasonably good as well. And therefore, the NIMs, even if they stabilize around current levels, with a good portion of their advances growth also coming in from gold loans, where the margins are relatively higher and asset quality pressures coming off, is one bank to keep on your radar. The other mid-cap bank from the PSU space would be Canara Bank. They had a huge deposit mobilization in the past few months. How they are going to manage the credit deposit ratio, which they will over the next few quarters, manage their NIMs as well, is going to be critical. But going by management commentary as they delivered in Q3, they're able to do that in Q4 and continue the same performance. I think Canara Bank can be one dark horse for the mid-cap PSU space.
It's a good day actually for IDBI Bank, and that news in a sense is something which is really pushing the stock ahead. Is IDBI Bank, Kunal, finally coming out of that hibernation 3-4 months, maybe 6 months actually now? It's
Yeah, I
been moving
think-
between 45, 50, 45, 50, 50, 45, 45, 50.
So it went to 60 end of 2022, and then I think corrected to 42 and a half, 43
it's been
levels.
there.
And it's been there, and it was a very slow and a gradual correction. It was not like a very sharp correction which had come by. So naturally, for the PSU banks, we look out for V-shaped, very strong rally spikes, to term it. And then the correction is also very, very steep. But this time around, it was a very slow, steady, and a gradual correction for these PSU banks, which was more of a time-wise correction, more than a price-wise or a major price-wise correction. Because after rallying 100%, 200% from their 52-week lows, if you see a correction 20-30%, we just call it as a more of a time-wise correction for these stocks. But I think these stocks are now making a comeback again, and that's because of the confidence which has come back into the markets as such. So I would believe that PSU banks, the likes of Canara Bank, Bank of Baroda, they would look very attractive. Even the likes of Union Bank, for example, I think at 68, 69 levels where it's trading right now is extremely attractive from a medium to longer term play. So I think now it's the time to try and start looking out for these PSU banking stocks, whether it's from a trading play or whether it's from a positional play.
IndusInd Bank is actually the one which is seeing the smartest recovery today. The stock is holding up 3%, and remember, this is coming on the back of 2 days of stark underperformance that you had after fears that it will not get further headroom of FPI buying and thereby an MSCI inclusion. So IndusInd Bank is finally seeing some recovery come by. I don't know if we can pull up the last 5-day chart or not. That would perhaps be a better indicator of how steep the recovery has been from what it did the last 2 days. There you go, 4% higher, but the large chunk of the move has come in today. There's SBI Cards as well holding out well. DLF, of course, is seeing a near 2% move. There's Escorts, there's Can Bank, Bajaj Finance is seeing a decent move as well come in. There's ABFRL as well, which is looking strong. Chambal Fertilizers, you've got Adani Enterprises, City Union Bank. So it's really a mix of stocks out there. But yes, chemicals as a pack, or for that matter, chemicals and fertilizers as a pack is the one which is holding out quite smartly. I don't know if we can bring up that management bite that we had from FACT. We chatted with the management earlier today. If we can just bring that up as well. In fact, let's hear out what the management first told us.
There is a prediction that there will be a little shortfall in the rain, but we are anticipating that the demand, what was there in 2022, will continue in 2023 also, because we are not finding any difficulty for selling our products in the market. As far as FACT is concerned, my volume will remain more or less same, because I am running the plant with almost 130% capacity utilization. So I don't find any scope to increase further productions at the plant level. But of course, we have a very optimistic plan for the import of fertilizer. And definitely that will give me the 50% increase in the volume as far as my total sales will be concerned. Because last year I have sold almost 1 million ton. This year my projection is 1.5 million tons. So since the prices, fertilizers are available in the international market, my company is expecting to import another 5 lakh metric tons fertilizer to be sold in this year. So the volume will go up by almost 40 to 50%. Government has already initiated to set up new 5 urea plant, and that will add another 60 lakh metric tons to the production capacity of India. Apart from that, there are 2 private companies that are coming up. One is Matrix, another 12 lakh metric tons. If you see the total dependency on urea itself is 90 lakhs metric tons. So that will be totally wiped out.
Okay, fact, of course, is one stock which has actually risen up almost about 50% in the last 5 trading sessions alone. Let's just bring up that intraday graph, not just today's price action, but the last 5-day or maybe a 7-day chart if we can bring up. 5% nearly is the kind of move that the stock has seen in just the last 7 trading sessions alone. And quite an interesting chat we had with the management with regards to all the concerns that they had. Still, they said that there is a volume uptick, and even though that they are, passing on the benefits of raw material cost pressures, easing on to the consumers, they still be in the money.
Yeah, and the worries about El Nino and Kharif season being a bit lower, that completely was, rebutted by the management. So perhaps that's the reason we're seeing that reaction, and a lot of news flow around how the subsidy is expected to pan out, how the prices of the NPK fertilizer is expected to go up. So all that working well perhaps for some of these counters as well. But separately, what else is happening in the markets? Well, FMCG also had a decent run of late. Mayuresh, your take for the FMCG pack? Do you think earnings can surprise positively, or there is a bit of negative surprise which is possible as well, especially because Street is banking a lot on inflation being over and commodity pressure being over?
Sure. Afternoon, Anisha. I think two things happening here. One, I think in terms of volume expectations, the volume push through will be very, very evident this quarter around. A lot of FMCG companies apparently struggled in Q3 as far as volumes are concerned. And therefore, I think how the volume growth plays out and pans out in Q4 is going to be extremely critical. You're absolutely right. In terms of input costs, the deflationary aspect has started playing through. A lot of inventory, the high cost inventory that they probably had on their books, has largely got consumed in Q3, partially in Q4 as well. Therefore, the entire premise in terms of input cost actually acting as tailwinds rather than headwinds Q1 onwards should play positively as far as the margins are concerned. The next trigger point for these stocks Q1 onwards is obviously going to be how the El Nino effect plays out. If the IMD forecast is to be believed, and if monsoons are normal, rural consumption will come roaring back, and that probably aids volume-led price growth for a lot of these FMCG companies, giving them the impetus in terms of the operating leverage that is much needed. So yes, I think few of these leadership stocks like HUL should probably be kept.
To address the flashes for you at the bottom of the screen, wherein the SIP figure from the AMFI has been released, and it's a very strong number for over 14,000 odd crores. My guess is this is a record high that we have seen. Last month we had seen a reading of 13,686, and that's gone up to the level of 14,276. And quite interesting it is, because on one hand we are talking about volumes being a tad bit lower, the retail participation ebbing away, but SIP flows at least continues for now. And that's the big takeaway that we have from the AMFI data.
It's March, Anisha. I think there was a year-end ETF and
maybe,
you know, because it's March and year-end, so there were some tax benefits also, which I'm sure investors must have availed. Because you normally see historically that a bump up which actually comes in some of those ELSS schemes also. March is the time when you want to boost it up, you want to do a little bit of asset allocation. But for me, what matters here is there are two parallel markets here. So the trader in the market is not that active, because those days of easy sugar rush, that is behind us, and the trader or the day trader or the positional trader is aware of that. Zerodha volumes, Angel, stockbroking, the retail volumes, Motilal Oswal, all the retail brokerages have reported a decline in their volumes. But the SIP investor also knows that you'll have to think in terms of not months, days, but years. And that investor is fully committed to keep the asset allocation under check. So now when you're looking at the planning for, let's say, FY24, you pretty much would say that 10 to 12,000 crore, which is about a lakh 20, lakh 30, maybe more, is something which you will get regardless of what is happening to the market. Because last 12 months have been they've been a year of, that's been a period of absolutely no return. If you invested in the index 18 months ago, you got no returns. If you invested in individual mutual funds, you've not even managed to beat the fixed deposit. But past performance is no guarantee of future return. Well, it's working the other way around. Because past returns have not been strong, everybody expects future returns actually would be different. 4 minutes to go, but it's a very, very heartening number. I mean, it's a change of culture, it's a change of allocation, it's a change of approach, and it's a belief in India, Rise with India TT now, which now is just coming true. I mean, I would have never thought that we would get a number anywhere close to 5,000 on a monthly basis, but 15,000 and sustaining in a market which has given no returns. I think bravo and touch wood to that.
And also a lot of it would also be debt inflows, right? Because of that March 31st. This is a net number that you're seeing.
This is SIP equities.
Okay, this is the equity number then, yeah. Okay, let's move on. Let's begin winding up for the week then. It's been a short one at that. But before anything else, let me quickly get in some BTST ideas going then. Kunal?
So two buy calls. Canara Bank is the stock which I would suggest a buy, heading towards a breakout, 310 as a target, stop loss 280. And the second would be a buy in DLF, again closing at a multi-week high. So carrying the long positions from the start of this week, targets of 440 on the upside, stop loss at 400.
Right. Naresh, what about your BTST trades?
So I'll go with one, because the first I was looking was IndusInd Bank, which has already moved up in the last 10-15 minutes. So that would be a buy on Tata Motors, which is closing well around that 468, 470 mark. A BTST target of 480 and a stop loss at 464.
Okay. Mayuresh, what explains this comeback in autos suddenly?
So two things. One, I think the expectations in terms of the worst factors related to semiconductors, the input cost inflation largely behind them. Second, in terms of the rush that we probably saw, at least till the December quarter in terms of bookings, as far as CVs and SUVs and PVs are concerned within that space itself. CVs have been surprisingly very, very strong, have held out in terms of volume growth for these companies as well. Last but not the least, again, coming back to the IMD forecast and El Nino, if it turns out to be a normal year, what we probably expected to see in terms of the volume push through because of government incentives, whether it's MSPs or otherwise, related to a bumper harvest, should probably lead to better realizations and improvement in terms of the two-wheeler sales as well. Emission norms also help to a large extent for the CV players in general because of the push through that happened in the previous quarter. And therefore, all these factors combined together are probably giving that positive impetus for the sector as
well. Tata Motors is the star. It just gave you that big breakout on Monday, and there is a lot of follow-up. Kunal, Tata Motor DVR is underperforming, relatively.
Haven't seen the chart, really. So yeah, it's relatively underperforming. But then I think these stocks, so DVR and Tata Motors, they tend to have a phase. For example, I think 2022 mid part when Tata Motors moved up to 550 levels, it was actually DVR which had hit a multi-year high for itself. So so the kind of phases of uptrend between these two stocks, they keep on changing, but net the direction is more important. Tata Motors DVR, for example, the more recent swing high is around 250 mark. For Tata Motors, it was around 470 levels, which means the difference between the movement in both of these prices is just about some meager 5%, 6%.
Let's look at the 3-year chart, Tata Motor DVR and Tata Motor stock. Now, what is DVR? You don't get voting rights. Now, frankly, voting rights for if you're a retail investor, if you're a non-institutional investor, you're not interested in voting rights. You're investing in the shareholder value. Because there are no voting rights, the DVR trades at a discount, and the discount is very fat. And historically, that's been the precedent. It's only in India, DVR is not a very popular instrument. Tata Motor DVR, that's Tata Motors for you, beg your pardon. You look at the 5-year chart, I'll just do it again. I lost my concentration there. Tata Motor DVR is up 5x in 3 years. And Tata Motor in that same time, I think, has given you similar returns. So Kunal, neck to neck, which means now DVR should catch up, logically speaking, because Tata Motor has gone up. The 3-year return tells us that the speed may change, but if you extend the chart to 2 or 3 years, the return is same. So if I put that logic, Tata Motor has shot up, Tata Motor DVR should catch up.
Yeah, it should. That's what I was saying. It should catch up, but there's a disparity of just 6%, 7% for Tata Motors and DVR. So you can play out for that 6%. But I think more importantly, I would look out for Tata Motors, whether it's heading towards a breakout direction. Yes, it is, and that's why I would probably bet on that stock much more than Tata Motors DVR.
Okay, finishing off with, the week with flying colours, we managed to comfortably close at that 17,800 mark. And even though the week has been a truncated one and today has been one of those flat days, but not without gains. So we've managed to hold on. Pharmaceuticals, your best sectoral performer. IT, the disappointment. But with that, we are completely out of time in this edition of Closing Trades.